China's collapse is a thing you've heard before, and for good reason. The Chinese economy has been in turmoil for almost 3 years now, but it's managed to not descend into absolute anarchy, and this is causing a hell of a lot of misinformation to go around. The Evergrande collapse was one of the most volatile and vocal times for Chinese investors in history. It was the second largest property developer in the world, don't forget, employing more than 10 million people in China itself, and overnight it ran out of money. But it didn't actually collapse because the Chinese Communist Party basically just said it isn't allowed to, and nor are the 50 other multi-billion or even trillion-dollar property companies that actually went bust. Now, when an evil government points guns at your investors' heads and tells them if they ask for their money back that they and their families will be disappeared, wouldn't you know, suddenly debts don't need to be paid off anymore and companies don't collapse. But this didn't just erase the losses, it simply passed them from one party onto another. And while the CCP does have the authority to do whatever the hell it wants in China, it can't literally control everything. And so despite spending literally trillions of dollars trying to stop the collapse of Evergrande and other property tycoons over the last 3 years, Evergrande has finally officially collapsed and been forced to liquidate. Now, anyone with half a brain cell knew this was inevitable and there was no real solution for China, but Chinese investors obviously didn't have half a brain cell between them, because this liquidation sent Chinese markets shaking and has alerted millions to the true danger that China is in. Chinese stocks have dropped off a cliff. Investors are picking fights with the communist government, and the CCP is hiding its economic data to try and trick the world once more. But the rot is real, and it's finally taken this decrepit structure down. In this video, I'm going to explain exactly what this most recent news of Evergrande is all about and shed light on what the CCP wish I wouldn't, the other problems Chinese markets have been rocked by over the last few days. So what actually caused this nightmare in the first place? Well, it was simply a bubble in the Chinese property market, and the biggest one in all of history that lasted for over 30 or 40 years. Investing into stocks or companies is quite difficult in China, so most people simply buy gold or property. And as a result of that being the case for decades on end, properties stopped being a place someone lived and started simply being a number on a piece of paper, and wouldn't you know, the number went up. But none of this supposed value in these properties was actually real. No one wanted to live in these properties. Half the apartments making up this bubble didn't have floors or ceilings, walls or windows. They were just concrete shells in ghost cities scattered across the country. Now, while times were good, this wasn't a problem. People felt rich and banks felt rich and property developers felt rich as well. But then the tipping point came, and overnight, suddenly the entire country realized this wealth was nothing more than thin air and it didn't actually exist. So people sold, supply exploded and demand crashed, and property prices all over the country shriveled up. The property developers who were building these apartment blocks were literally the most indebted companies in the world, and suddenly their assets were worthless. They couldn't sell any apartments, so they couldn't pay their staff or just afford to function at all. Over the course of a few weeks, the entire property market in China revealed itself to be a house of cards, and it started to fall down. But the Chinese Communist Party essentially just fronted this entire failed industry and started paying people and businesses and investors off. Communists spent literally trillions of dollars trying to hide their problems, sustain the bubble, and they did hide it for a couple of years. But a few days ago, we got brand new information about this entire fraud, and in particular, we learned about the biggest failure, Evergrande. Now, Evergrande has just refused to pay their debts for 3 years now, so them being forced into liquidation isn't that surprising, but it is public and it is totally unignorable. A Hong Kong court has finally ordered Evergrande to sell off its assets after failing to restructure its debt for the multiple time. But the company apparently has $242 billion in assets, so surely I'm overreacting and this isn't a big issue as it seems, right? Well, that $242 billion is again just a number pulled out of thin air. For example, Evergrande's headquarters was seized by the Communist Party last year in order to be sold to pay off some of their debts. And the Communist Party, who now own this building, claim that the office is worth $1.6 billion US dollars. Except it's been on the market for well over a year now and not a single offer has come through. The region the building in has seen vacancy rates rise by 16% last year alone, and property prices fall by more than 35%. While the CCP claims it's worth $1.6 billion, it's probably not even worth half that, because that's the actual price someone would be willing to buy it at. And without a buyer, that $1.6 billion figure is just imaginary. And this is the exact same story told all over China. So Evergrande's $340 billion worth of debt is not going to be repaid, and the rest of the industry's $10 trillion in debt isn't going to be paid off either. Now, here's the truth. This is all obvious and there's no denying it at this point, which is exactly why investors are panicking and dumping their Chinese assets, because it's all smoke and mirrors and there is no real value to be found here at all. And fundamentally, this is actually what's caused the chaos in China over the last week or so, and we shouldn't expect things to get any better at all. But what exactly happened? Well, let's start with the stock market, shall we? Now, in investing, there's a common idea called enterprise value. The idea that you shouldn't only value a business on its brand or revenues or future projections, but also on its cash reserve, its assets and its debts. And this is how businesses are valued. If a stock only makes $1 million a year in profit, you might expect it to be worth maybe 10, 15 or $20 million. But if it's also got $100 million in cash, then it would be worth 110, 115 or $120 million. Why? Because that cash is actually collectively owned by the shareholders who own that business. Now, if instead of holding cash, the firm owns real estate, well, the principle still stands, except it doesn't stand in China because the Communist Party has shown it's willing to essentially seize assets, cash and property from businesses for pretty much no reason at all and withhold them from their shareholders. So if you're an investor in China, the value of those assets on your balance sheets simply isn't real because the communists would never let you anywhere near it. And this realization is sweeping across China as we speak, causing markets to be incredibly volatile. In fact, Chinese stocks fell so sharply on Friday, the 2nd of February, that the markets closed at a 5-year low, far lower than any COVID crash saw them drop to. For example, if US stocks had dropped to their 5-year low, we'd be talking about an almost 60% drop here. Now, of course, the communists did their bidding and tried to stabilize markets, but they still couldn't stop the rout completely. So the Shanghai Composite Index fell 6.2% and the CSI fell 4.6%. The CCP printed more money and sent out their monetary stimulus and even vowed to keep government spending inflated despite the massive collapse in government funding as a result of the property collapse. But even after those promises, those actions, Chinese stocks continue to fall, and this has now caused a new fear in China that investors and businesses are going to become victims to a new wave of margin calls as their assets are swiftly losing value, which could become a vicious self-fulfilling cycle. But that is where the next issue for China comes in, because investors aren't happy about this at all, and usually they would be too fearful for their lives to speak out, but now they're angry and they're pointing the finger at the government. One fund manager named Zhu Daiwei said that the spiral downwards was caused by forced selling from margin calls, but also that the Communist Party's inflation of prices by simply buying $1 billion worth of stock isn't real demand and it will not solve any problems. And while this happens, the Chinese propaganda machine is at full speed, claiming that market optimism is high, while social media mocks that claim, posting screenshots of the market's actual performance next to their claims. And let's not forget where this is happening, the most heavily censored social medias in the world, where even the slightest comment against the government or a single post of Winnie the Pooh can result in imprisonment. One investor, who I'll keep anonymous for his safety, said the commoners in China have a bitter plight, that those in power are high and mighty and pay no regard to the life or death of commoners. Another one even said, I can no longer love my country after investing in its stock market. And the communists know how desperate the situation is. They've started hiding as much economic data as they can to pretend that the situation is better than it is. An example of this is that last year, China just simply stopped reporting the youth unemployment rate after seeing it rise sky high above 20%. And so now they claim that youth unemployment is low and all is fine, but they just aren't going to show you off their workings. This has essentially left anyone who actually wants to invest into Chinese assets entirely in the dark, and they're forced to rely on other measures to try and gauge the actual state of the Chinese economy, because there isn't much data coming out of China, and the data that does come out is simply fraudulent. One measure that many investors are looking to is how foreign companies who accurately report data are performing in China, with a notable example being Apple. Of course, Apple's last quarterly results were frankly very bad in China, with revenue falling by 13% over a single 3-month period. A few months ago, China made up almost 21% of Apple's total sales, and today that number has fallen down to 17%. And this is all the while, let's not forget, Apple has been dominating in every other market, so the question has to be asked, just how bad is the market in China for Apple, the most dominant tech brand in the world, to be performing so poorly? All of this is now culminating in what can only be described as China's comeuppance. For decades, they have falsified information, inflated bubbles, and tried to pull the wool over everyone's eyes but none of China's success is actually real. Even in terms of where the country was 5 decades ago, Taiwan, South Korea, and Singapore have shown what a true Asian miracle can look like, with wealth per citizen and GDP per capita more than tripling China's frankly pitiful statistics. It seems silly to say this, but accounting for population is actually a very difficult thing for our minds to do, and it turns out the only thing China exceeded in ever was population, and even then, its population is now on the decline. A brand new study has actually just come out on China, which suggests that China isn't going to overtake the US as the largest economy in the world in 2 years' time, and not in 5 years' time or 10 years either. In fact, this new study states China won't overtake the US economy for more than 50 years until 2080, if it even ever happens at all. And why such a gloomy outlook for the largest country in the world? Because its debt levels are strangling its economy, the aging population is growing a problem by the day, and the property crisis looks like it just might never end. And this isn't coming from some rinky-dink financial advisor or some politically inclined think tank, but from Citibank themselves. And honestly, this isn't actually surprising at all when we consider the US and GDP in true comparison. After all, this is what their GDP per capita figures look like over the last few decades, and that's being kind and using the Communist Party's incredibly inflated and falsified figures. The reality is that China isn't on the rise, it's on decline, and the only thing it actually succeeds in is in terms of its population and its landmass, which means its future is rocky at best.